Welcome to Frugal First, a channel dedicated to helping you build financial wealth. Hello, Kevin.
Hello, Alan.
How you doing?
Not too bad. Good to be back.
That's good. So you got the Apple Watch today, is that new?
No, it's the broken one. Frugal living.
Yeah. Well, that's
don't want to buy another one.
through broken watches, yeah?
No, well, it's not broken. We'll stick with that one. It does the job.
Is it broken or not?
It's just the screen. The screen that's just broken. But,
Okay.
frugal living, it still works. I use it a lot in the gym, and it does its purpose.
Okay. Well, good to know. So from today's episode, obviously there's a lot going on in the news. There's social media. There are claims that the market, could crash this week because of what's going on with the EU suspending its trade deal with the US. Is there any truth to this, and should investors be worried?
In terms of any truth, I've seen a few posts on social media, particularly on Twitter, about the EU suspending trade deals with the United States. In terms of how it affects me as an investor, or should investors be worried? For me, it doesn't affect how I invest. My long-term goal is my long-term goal. I have a stoic approach, as I've said many times, to investing. I have a long-term mindset. So such news about market declines or anything like that, it doesn't really impact me in any way, shape, or form.
Okay, but if you're someone who's got a lot in the market, and your portfolio is going to be dropping by a significant amount, surely that's a cause to worry, no?
I can see how that may impact an investor, someone who might have a lot invested. However, if there's a market decline and your portfolio is in the reds, unless you sell, you haven't really lost anything. So what's really important is, if you are seeing a red, that's an opportunity for you to take advantage of it. I welcome market drops. I welcome market declines. Why? Because I take advantage of funds, purchasing funds at a reduced rate, which later on can become a plus. You can have those little extra gains. So for me, I welcome market declines.
Okay, well, we see that the gold is actually received the safety bid. The gold is actually doing quite well. Would you advise someone to jump into gold?
I don't, as you know, with my investing approach, I don't jump on what's trending. I don't jump on the hot topic, what investment instrument is doing well. I stick to my approach of low cost index funds, having a long-term stoic approach to investing. So if, for example, if gold is trend, I can see it's all-time highs. I believe the last time I checked, it was at 4,000 and 4,686 per ounce or something for gold. It's doing really well. And also investing in gold or buying assets in gold is something that, as you know, I'd like to have an informed understanding about the investment instrument that I'm investing in. Gold isn't something, I know it's quite straightforward, but it's not something I'm quite knowledgeable in. The stock market, I like to think I have a good understanding about it, especially long-term low-cost index funds. I'd like to think that. But in terms of what's currently trending, that isn't low-cost index funds. I don't have much knowledge in that. Okay,
no, thanks for sharing your honest opinion. So for someone who's new to investing, how should they even start right now amid all the market noise? Should a beginner wait for a crash to pass before investing?
I'll say I'll use the famous Chinese proverbs, which is the best time to plant a tree was 20 years ago. The second best time is now. If we relate that to investing, and Peter Lynch said it best, time in the market is much more beneficial than timing the market. So the best time is now. You hear all sorts when it comes to the stock market. It will be impacted, with a lot of economic behaviors, market behaviors, or these sort of things. As we're sort of discovering with this news, some people have gone as far to posting online that the stock market is going to have its worst week in the history. So for new investors, the best time to invest is now. Block out all the negative news. block out all the fear-mongering news, and do your own well-informed research, or get in touch with us at Frugal First. You know, there are lots of videos that will help you. There are lots of platforms that you can use. You've got the likes of Trading 212, you've got the likes of Vanguard, you've got Invest Engine, you've got Hargreaves Lansdown. Now, all these companies that I am mentioning, do get in touch with us, by the way. We have been promoting your platforms and your companies quite a lot for some sponsoring opportunities. And I'd also like to add the disclaimer that I'm not a financial advisor. This is all for educational purposes, and your capital is at risk when investing, and do your own research.
Yeah, we get that. You've said that a few times now. But yeah, okay. So if I start investing today and the market drops tomorrow because of a trade deal drama, for example, or something, what should I do next?
That's a good question. What to do next is to have a long-term mindset. Time in the market beats timing the market every time, and this is a famous quote. That was a famous quote from Peter Lynch. I love that quote, and another famous quote by Warren Buffett, which says that the market takes from the impatient and rewards from the patient. So if you were to invest now, and the market was to drop, just think about those long-term gains. Yeah.
Okay, long-term games, absolutely. Now, I like the quote: "Time in the market is better than time in the market." That's very good. So, there's often a lot of fear mongering, about market crash and things like that. Do you think it will ever scare off new investors from ever starting?
I hope not. It's common because people will think when they first think about stock market investing, they'll think it's gambling, or they'll think it's only rich people that can invest. They'll think that it's white collar business people in suits, sitting in front of a computer with graphs. And investing in the stock market is much more easier than that. As I said, you can do your own informed research on Google these companies, Google about the stock market, Google low cost index funds, or if you're somebody that you're confident about buying shares in individual companies such as Apple, Amazon, Nvidia, Microsoft, Alphabet, all these companies, and you want to do it that way, you can. Or alternatively, you can get in touch with us at Frugal First Investing at gmail.com. We're on TikTok, Frugal First. We're on Instagram, Frugal First, and also you can get in touch with us on YouTube. If you'd like that hands-on sort of guidance, that hands-on education to go from beginner to confident investor, and obviously we have that we have that experience of building that six-figure portfolio, so you can get in touch that way as well.
Great. Okay. So talking about kind of breaking it down a little bit more. So how can beginners ignore panic and actually build a simple long-term investing plan that actually works through, weeks like this? One
of the top books that I read that helped me when building my six-figure portfolio was The Millionaire Next Door. Really good book. Do look up that title. Morgan Housel's great book, The Psychology of Money, and The Same as Ever, and also Darius Thoreau, his book on the Stoics' Path to Wealth. These are all great books that I'd recommend for new investors or beginners to read, which sort of coaches you about having that long-term mindset, having that patience, and blocking out all the noise, and not allowing the fear-mongering news to affect how you invest.
Great. And what can Frugal First offer next to help beginners go from zero to confident investors, despite obviously what we're seeing in the market? How can we help people start their journey?
In addition to the regular, obviously, educational videos that we post here at Frugal First, giving people the tips about long-term investing, the information, the reassurance, building confidence for you to take your finances, for you to take control of your finances. We're also putting together the 6 to 8 week course to help people who'd like like to learn about, who'd like to take control over their finances and manage their own portfolios and build their own portfolios and build long-term wealth through the programs that that we're tailoring for people who will get in touch with us, that will help you from beginner to a confident investor. So that's what they can expect from us. As I said, do get in touch with us. We're on Twitter, Frugal First. We're on Instagram at Frugal First. We're on YouTube as well, and also you can email us and or drop your comments if there's anything that people are unsure about. They can also drop a comment if they've got any questions or anything that they're unsure about. Make sure you drop your comments, and we'll do our best to get back to you.
Wonderful. That's great. Look, it's like you said, a lot of things are in the news at the moment, and you want to just make sure investors are steady and they're doing things the right way. So thank you so much for your time today. Any other passing thoughts before we leave the people?
No, just live frugal and have that long-term mindset. And happy investing.
Happy investing, yeah, with your Apple Watch and
the broken Apple Watch.
Yeah.
The broken Apple Watch that does the job in the gym.
It's the Apple Watch. Oh, you got to go to the gym as well?
Oh, yeah. Can you not tell?
Did you pay? Did you pay for it?
Facebook Marketplace.
Okay.
Frugal living.
All right. Thank you, Kelvin. Enjoy your day. Bye.
Thank you.